Siddhi, can you give me a screen share? I'm unable to share the screen.
Yes. So can you share the screen now?
Okay, we'll retry. Just a moment. Phone glitch. Just a moment. Yeah, is my screen visible now? Hello, am I audible?
Yes, sir, you're audible and the screen is also visible.
Okay, great. Good evening, everyone. This is Srinivas Kole on behalf of Shri Balaji World Components Limited. I welcome you all for the earnings call for H1 FY24-24. So, as a part of the agenda, we will run through the investor presentation first, and later on, we will be open to take the questions. So, with everyone's permission, I'll just start. So, this is Sri Balaji Wall Components Limited. We are a one stop solution for all your assembly needs, might be for wall or precision machine components. So, speaking about the overview, we are a company who are dedicated to deliver high performance wall solutions by harnessing modern machinery and advanced technology to ensure that all products are meeting the stringent industry standards for as per the international norms, and also with a strong emphasis on continuous development innovation. Our expert team consistently develops new products and processes and enhances the guarantee for the durability and the cutting edge performance. These are few facts and figures about the company. We have having two plants, around 278 plus strength of human resources, three forging hammers. So both the plants are spread across around 70,000 plus manufacturing area. And currently we have a global supply across 14 countries and 7 continents. We as a company are awarded with three certifications. One is ISO 9020 2015. Second is PED, and third is Norsok F51, which is awarded by the Norwegian Petroleum Institute. And we have currently 115 plus machines, right, which can cater the wall components and precision machine sizes, right, from 1 inches to 24 inches. These are the key facts and figures about the company. We are currently a company with around 208 crore of market cap, with ROCE of 24.1%, ROE of 36.2%, stock P of 25.1, and 10.2 EPS, and 14.7.3 industry P. This is our mission and vision. to accomplish and the accomplish the growth of Shri Balaji World Components Limited. So, to be recognized as the foremost leader in the industry, providing premium wall components and industrial equipment that set the standard for quality and innovation. And that's the mission to accomplish our vision. These are our core values on which the company's foundation and growth and journey is based upon. First and foremost, being the trust. Second is the customer centricity, transparency, commitment, teamwork, and excellence. These are some of the milestones of our organization. So we started in this company, those started in 1989 by the first generation in the different name. This organization was started in 2011, which is the incorporation in the name of Shri Balaji Wall Companies Private Limited. 2020 and 2021 assets from the promoters company, namely the Balaji Enterprises and Srinivas Engineering, were done by Shri Balaji Wall Companies Limited. 2022, the first plant was established under this name for the machining plant and the current registered office, that's at Chakan. 2023, change in the name from 20 private limited to limited, pursuant to conversion of company from private to public. 2024, we started successfully launched the IPO and commissioned the state-of-the-art forging plant in 2024. These are few major milestones of Sri Balaji Wall Components Limited. These are few of our products that we speak for the wall. First being the trunnion mounted ball, second being the segmented ball, floating ball, ISO flanges, glands, body three pieces, trunnions, trunnion plates, seat rings, flanges, standard and non-standard, both we manufacture. The double bleed ball wall body, that's DBB wall body. That's the seat type wall, seat retainer, bonnets, and plugs. So mainly we deal into all types of wall components, and also that the few products that are not displayed here, we also do some precision machine components for construction equipment manufacturing, pharmaceutical, in the machines manufacturing, defense as well, power generation, and petrochemical. These are the two awards that the Sri Balaji has been awarded with. One is for the financial management, and second is for the best supply chain practices in the manufacturing sector. Our competitive strengths are the same. Integrated manufacturing, because we have in-house forging, heat treatment, and machining. So that gives a leverage, a quality leverage, and also confidence to our customers. Being all the three main processes in-house, that gives the confidence to the customers regarding the quality and cost efficiency. Second is the diversified product range. I have been emphasizing on this because of the wide setup of machines, different machines, and we can cater products from half inches to 24 inches, which is capable of handling large orders and diverse industries with a broad customer base. Already we have a huge customer base, continuously active and inactive both, and from which the pipeline for the businesses is built up. We also have strategic alliances. So there are few processes which are value added processes which enhance our delivery, and which creates a wider spectrum of service arena as of Sri Balaji Wall Components Limited, and which we have expertise in centrifugal casting, open die forging, coatings, and which are used for enhancing product durability and performance. Our management is experienced, knowledgeable team with a proven ability to meet high quality and reliability standards, including the middle management and also the operators level. We have a long-term customer and supplier relationships, which is built upon with customers on the quality, timely delivery, and adaptability, fostering lasting partnerships. And we continuously have repeat orders from the customers. I've already mentioned these are the sectors we are serving right now. Major and dominant being the oil and gas, petrochemical, construction, equipment manufacturing, power generation, food and beverage, pharmaceutical, and defense. Pharmaceutical and defense are the two sectors that we have started working in this financial year. For defense, we have served around two orders around with a value of 30 lakhs, somewhere around 2 orders. And for pharma also, continuously we are building relationship with the customer, with whom we are seeing a very good prospects in coming few years. These are a few emerging sectors that will impact positively on the wall component consumption. Smart walls and IoT integration of sensors and data analytics into the walls. Sustainability and efficiency, focus on eco-friendly designs. Customization and specialty walls, tailored solutions. So there is a very huge growing demand for specialized and custom designed walls, which is really helpful for Shri Balaji, because we serve with many materials as well. So this right from carbon steel, stainless steel, duplex, super duplex, alloys, nickel based alloys, and bronze, aluminum. So because of which the customer looks at as a one stop solution. This is the manufacturing process that we follow at Sri Balaji, right from PO receipt. Then it's the internal test plan creation, then material planning and bomb preparation, material procurement, sourcing, heat number allocation, that's a GRN, where quality inspection and clearance, material allocation, manufacturing, inspection and marking, and packing and dispatch. We are dedicated for a very, very good quality assurance for all our customers. There are some disturbance. I request everyone to kindly mute the call. So speaking about the quality, we have around 15 plus engineers in the quality assurance team who which take care about the inward material, in process inspection, final inspection, and also the audits and certifications of the organization. We in house we have hardness testing equipment, which is bench type Brinell and Rockwell hardness testers. We also have precision machine measurement tools, including the Trimos, surface roughness testers, and all the gauges we have in house. We have NDT facilities in house. Our team is level 2 NDT personnel who are capable of undergoing and under doing the tests of UT, the magnetic particle, liquid penetrant, and also the hydrostatic test that we do for our customer. And all the required in some testing is done in the enable accredited labs, which creates the credibility in the market. These are the certificates which I had mentioned before. This is our order book for the current order book that we have right now. That's at 15.24 crores, out of which 3.24 is export, and the rest is the domestic orders. So I've been getting various questions regarding the PAT margin drop from the investments, and also we have been undergoing that. So there are three main reasons for this. First is in the increase of salary and wages. So it's if we say increase, it's not a direct increase. We have formed a new engineering department for improving our current processes, and also for the new processes and the product development, which needs a technical overview, technical knowledge, and expertise for giving the feasibility, checking the feasibility, manufacturing the same, giving the costing, manufacturing in the cost given, and also delivering the quality products. Apart from the sample, also once it is productionized, they have to take care about the process capabilities of the organization. Additionally, the impact of annual appraisals and hiring of people further contributed to the increase. So we are also planning to integrate a few new digital systems for the operational efficiencies, to control the operational efficiencies. And also, we currently have the appraisal cycle that has been placed every July. That's the appraisal cycle, and we analyze or check the performance for the previous year's, the financial year. So last year, the appraisals were given in the H2, and this year they were given in H1, because that's the cycle. Last year it was delayed due to a few reasons, due to the process change and process integration. So this is the overall total impact on the salary and wages. Second is higher depreciation due to asset addition. As everyone is aware, we are having the new capital expenditures for expanding our operations and upgrading the infrastructure, which has resulted in an increase in the fixed asset, subsequently, which is driving up the depreciation expenses for the fiscal year. And also rise in the professional fees. So this year, right from last year, continuous improvement has been at the forefront of the growth of our organization. But doing it more effectively and efficiently, we are collaborated with few of the learning development and the professionals who are professional and expert in the in the domain that we need. So we have incurred the higher professional fees to enhance operational excellence, engaging external experts to improve the processes and workforce capabilities for long term growth and efficiency. The investment reflects a commitment to sustainable progress, because if we want to grow in the longer run, we have to strengthen the foundation, and that's how the growth horizon will be built upon. So for that, we are hiring the professionals this year. So the forging plant, it has commissioned from 1st October 2024. You can see the photographs. That's the hammer 1, hammer 2, and hammer 3. This is 2.5 metric ton closed die hammer. This is 1.5 metric ton closed die hammer, and that's the 300 ton screw press hammer. Beside this side, which is not visible in the photograph, are the two heat treatment furnaces. This plant is fully operational, as you can see. That is operational from 1st October. So the previous plant was spread across 8,000 square feet. Then the current plant is spread across 22,000 square feet. Before we had one hammer, and now we have three hammers. And before we were able to manufacture components up to 28 kgs, and now with the addition of two new hammers, we'll be able to manufacture components up to 68 kgs. So that was commissioned on 1st October 2024. This is the utilization of the IPO proceeds. So out of everything, we have utilized around 16.75 crores of the funds that we have raised. A few machineries are in order stages, and that's how in coming few months it will be utilized. The allocated funds for working capital and GCP have been fully utilized, and the balance is only remaining for the capital expenditure. Also, I'm delighted to announce that on 3rd to 5th of December, we will be exhibiting Shri Balaji Wall Components Limited at the exhibition in Germany, which has around 350 plus international exhibitors, and more than 7,000 visitors are expected within 3 days. And this offers unparalleled opportunities to generate high quality leads and strengthen our industry presence effectively. So this is the first time our organization will be participating in such a huge exhibition. We have a 3-day plan to visit there and also visit all the exhibitors. So we have quite a huge spectrum of visitors expected, and I'm sure this will help Shri Balaji grow in near future. Speaking about the wall industry, it is driven by the increasing demand of efficient fluid and gas controls, and CAGR is of around 7% over the next year, fueled by infrastructure development, aging system replacements, and IoT, which has already been mentioned. These are the financials. So from speaking about revenue, this year we have done 36.96. Other income has at 51, which is, goes to total income of 37.47. Our EBITDA margin stands at 14.42 percentages, and the PAT stands at 5.97 percentage. These are the balance sheet. So our equity capital, reserves, borrowings, other liabilities, and also fixed assets, CWIP, investments, and other assets. Thank you. That's all from my side.
Thank you very much. We'll now begin the question and answer session. Please raise your hand to ask your question. The first question is from Mr. Tushar. Sir, please unmute yourself and ask the question.
Hello, sir. Am I audible? Hello.
Yes, sir, you are
Ye-
audible. Please go ahead.
Yes, sir. Thank you for the opportunity. I am a bit new to your company, so a bit of basic clarification first. So, you manufacture components which are then sold to valve manufacturers, who will be the OEMs in this case, and then they sell forward to contractors and such. Is that understanding correct?
Yeah, that's totally right, sir.
Okay, sir. So, who are some of your clients?
Our clients are Emerson, Flowser, also Crane, Samsung Controls, who are all the OEMs. We also serve to L&T Valves and all the MNCs that we have in India. We serve everyone.
Okay, sir. And so, do you also do valve assembly or only the components? And does your business also have an after sales repairs replacement part to it, or is it that the entire valve gets changed?
No, sir. So right now we are only doing the components and helping our customers in their, to create a seamless supply chain for them, sir. So like I mentioned, we have a capability of manufacturing various products. So from 1 inches to 24 inches. So if you take the example of a ball wall, we manufacture ball, stem housing, ISO, trunnion plates, body, and connector. In ball also, we manufacture floating wall, trunnion mounted ball, metal seated ball, C port ball, V port ball, L port ball. So these are the various components we manufacture.
So, any plans to foray into assembling also?
Right now, I'm unable to comment on that.
Okay, and does your business have any sort of after sales component to it?
No, no, sir. Whatever we have the while PO. If the wall also comes for the after sale service at our customer, then it is again raised as a new PO for us. We are unable to identify if it is a new wall or a spare wall because the components, design and everything we get with every purchase order. So we are unable to find out that. But yeah, we know that apart from the new infrastructure, already the if there are some repairs, maintenances, upgradation and everything going, then also the wall changes cycle take place.
Okay, sir. And so, how do you get your orders? Like, is there a bidding process or is it a one-on-one negotiations?
No, sir, there is no bidding process as of now. Everyone, mainly our businesses comes from the current customers, which gives us repeated orders. And also our new business development, we have started strengthening from March, rather April 2024. We have started improving our presence on LinkedIn. We have started building the new business development as a department. And also we are, like you, I have mentioned, exhibitions is again one of the thing to, because we have to grow horizontally and vertically as well. So that's how our businesses comes.
Okay, sir. So, can your products be used in API certified valves?
Yes, sir. Because right now we are not though API certified. In near future, we are planning for API 20B 20C. But currently, because of our certifications and everything, if the wall, if the it depends on the type of wall, the type of company, and the type of application. But we do serve our all our customers are API certified, and we do serve them with the relevant products required.
Okay, sir. And so, if you were to get the API certification, what sort of revenue and margin opportunities would that unlock for you?
So that because API opens avenues over the world and credibility is upnotched by many multiple times. We have not studied exactly revenue and everything. I'll have to get back to you on that quantified way, but I'm sure it will be a positive impact on the organization.
Okay, sir. I have a few more questions. Get back in the queue for them. Thank you.
Mr. Ayush Agarwal, you can ask your question now.
Yeah, hi. Good afternoon, sir, and thank you for this opportunity. Uh, my first question is why could we not grow in this half given the pace at which the valve industry is growing? Are we seeing a slowdown from our customers, or did we face some particular issue in this half?
No, there was a bit slowdown from our customers. but that was due to first was the general elections for India, and also because of the presidential elections at USA. Though USA, though we export also, but many of our domestic customers we supply to them, and they in turn supply to USA. So there was a bit, bit of till the results were declared. There was slowdown for last, I would say, 8 to 10 weeks because about the clarity. But said that the flow and the pipeline is, we are seeing a positive, positive change from last few weeks now.
Okay, so was it like we got the orders but we couldn't supply them, or
No, sir. No,
we
sir.
didn't even get the
Our
orders?
capacities are capable to take more orders as well, but there was a bit slowdown in the conversion of the orders, sir. Though we were,
Got it.
there was the pipeline was good with the conversion, because especially the international, though our export has increased. If you would have seen, our export has increased from last year, but few of our customers domestic who directly supply to USA or UK, there they saw some convergence issues, sir.
Okay, got it. So since we have this pipeline ready now, and now that the election periods are over, what sort of numbers do we expect in H2 and FY26?
FY26, it will be, we are seeing a positive trend, and our pace will also increase from now on. I think that's my judgment. I think from in next few weeks the pace will multiply now.
Got it. And how much was our exports in this half?
Somewhere around 33%, if I'm not wrong, somewhere around that, but
Okay.
39%. I'm
And
sorry, 39%.
got it. And now that our operating margins have come down due to the various reasons you have shared, when do we expect them to go back to 16 to 18% levels, if at all?
So the thing is now, it is a continuous process. We will be able to go there, I'm sure, and we'll be also improving it. I'm sure I have the confidence in my people, my organization, and the whole industry as well. And like I have mentioned, we are also growing vertically and horizontally. In near future, we'll be able to go, sir. But now that we are in a very aggressive, capital expansion mode, so it might take a bit time, and this is time we are taking for sustainable growth, I would say.
Okay, so what sort of further hiring are we expecting? Because it
Sir,
seems that's the major reason for the operating
yes,
margin
that is one
decline.
of the reasons, but other also there were reasons. Na? The appraisals also were the reason. But we are also strengthening our sales marketing department, engineering department, and also, like I mentioned, ERP also we are upgrading to take hold of the operational efficiencies, and also to improve the efficiencies of our people. So, faster the process, faster the speed, faster the, the invoicing. That's what we are saying. Not much, but yeah, we will be also seeing hiring this year and this H2 too, because we are planning for, and again, more aggressive expansions. Expansion as in the product expansions.
Okay, so it seems that H2 will also be on a similar margin level, right?
Yeah, but it will. I think it will be a bit more improved stage than this, sir.
Okay. So my next question is, we have a lot of land with us that is vacant. How do we plan to utilize that?
Our primary focus will be on capacity utilization of the forging plant, sir. And maybe within next 3 to 6 months, we are sure that there might be also the IPO proceeds. There is one machine that we have ordered, which will expected next year, because there is a huge lead time. So maybe, but right now we are, we are still in the thought process of that, sir. So I will
Okay.
not be able to comment immediately.
And sorry to repeat the question again, but if you could share any update or any sort of development have we seen on the assembly of these valve side?
No, sir, we haven't started the assembly yet.
Okay, got it. Thank you. I'll get back in the queue.
Uh,
Mahesh, sir, you can ask your question now. Mr. Mahesh Shuttle.
uh, Hi. So I would like to know what would be your revenue size, which we could hit with this new capacity coming in. Could you please throw some light on a full financial year basis? What could be our top line?
More than revenue, I can say that the forging facilities, before we used to manufacture around 65 to 70 tons a month, but the current capacity can handle up to 150, somewhere around 150 tons a month. So almost more than double we have added the capacity, and the size ranges, especially the size ranges, have effectively expanded. So before we were able to manufacture a ball wall up to 4 inch. Now we will be able to components up to 6 inches. Not all, but ball, stems, body adapters, somewhere around that. And with the stems, before we were unable to forge the stems, but now with the screw press we are also started manufacturing the stem forging in house.
Any ballpark number you can give for this
um,
turnover?
the revenue will surely increase, because we will be able to, our machine shop is able to cater up to machining up to 24 inches. So added the sizes of the forging, it will be our, so basically our procurement and the conversion cost will be less for the sizes we can forge, because instead of outsource we will be able to manufacture it in house.
Fair enough. In this 15.64 crores order that you say as on date, do you also have any order which is for forging of goods about 28 kg?
Yeah, we have, sir. We have, sir. So 6 inches ball for few orders which we have. So, like I mentioned, our plant commissioned on 1st October 2024, because it's a heat treatment and hammer. The initial 2 weeks were taken for the calibrations, alignments, setting of the plant, and also because it's a hammer and heating. So, aligning the process, realigning the process again, and everything. So now, post Diwali, we have started communicate. We have already communicated to customers long back, to our existing customers, but specifically, so we are focusing on two things right now for utilization of forging. One is wherein the customer, if they want only forgings, we are ready to give them only forging, and also we will be also focusing on the full finished components, wherein the machining plant capacity will also be utilized.
So, what on the working capital cycle, I would like to know what would be the typical working capital cycle with our full turnover basis, let's say with this new capacity. Will you need additional working capital in books?
Uh, I don't think very much, but yeah, it will be a bit more added working capital, because now the forging capabilities have increased. So maybe for raw material procurement and everything, but it won't stretch very much.
What is the typical working capital days you have currently?
So I didn't. Can you repeat your question, please?
What are the working capital days like currently in the business, like?
Days.
Or let's say, what would be a working capital cycle? Data plus inventory.
Uh, so you mean the rotation from, like,
Yeah,
from
yeah.
the
Yeah, data
okay,
plus inventory, yes.
somewhere around 90 to 100 days, sir. Rotate.
Okay, so this will be the standard one, or this could come down after
No,
we
sir. Immediately it won't come down. Maybe in a longer run it can, sir.
Okay, fair enough. All right. Thank you. That's it from my side.
Thank you, sir.
We'll take the next question from Mr. Siddharth Shah.
Yeah, hi. Thanks for taking my question. One was
Right.
in our components, how much of the total valve cost would be, attributable to the components we supply?
Sir,
And
yeah, please go on, sir.
no, please continue, then I can ask the next one.
Okay, so for every wall, we manufacture all types of wall components, but few of our customer buy some components from us. Few of the customer buy some other wall components from us. So but speaking as a total, around 50 to 60% of a wall has the wall components in it, of the wall cost, I mean.
Is the components you supply?
Yeah, we can supply everything.
But when you get an order for a
Mhm.
valve, broadly about whatever 40 to 60% of that total cost of the valve is the components you supply.
Yes. Sir, we supply as in we can manufacture all types of wall components. But if a manufacturer is manufacturing wall, sometime he might take ball from us. Maybe they have some customers also have their in-house facilities. They have some other strategies. So it depends on the customer to customers. But given a chance, if we also supply in kits to many of the customers, yes, sir, we can around 40 to 60%. You can say.
Got it.
Again,
And
the strategy of the customer changes because according to the wall, sir. So what type of wall it is, the order is in the application of the order. Maybe it is domestic or export. Even if it is domestic, what is the application, the criticality of that project, the criticality of the material. So it depends everything on that, sir.
got it. And just maybe one basic question, but why is there so much of a focus on forging for the components and not so much on castings?
Because
Is
of the
that a
quality,
line?
the quality and the strength that you get in forging, casting won't be able to cater that much, sir. Again,
So that
if the application is not so critical, they will allow casting as well. So not an issue.
okay, got it.
But
And
if you say that it is a forging wall, everyone will say, okay, so they know that the quality is taken care of.
understand. And maybe just a last question. Do you have some sense, like in a valve, say you supply X components, maybe a competitor supplies, Y components. How many valve component suppliers would there be for, a typical valve? Like 2, 3 suppliers, one, 5, any number?
Depends on customer to customer, sir. But yeah, there are some. So there are some other suppliers also. So again, the if depends on the capacity of that customer, what types of wall they manufacture, what type of materials, types of wall they serve. If it is a basic wall, then there might be some different procurement strategy for them. If it is a special wall or a critical wall, that might be a different strategy for them.
Got it. Thank you.
Mr. Damodar, you can ask your question now.
Good evening. Thanks for the opportunity. Sir,
Good
my
evening.
first question is how is the raw material prices, sir? Has it come down and has it affected our top line figures also?
Sir, because we maximum work with PO to PO and quotation to quotation, the raw material prices whenever the live trend of the prices are taken care every time, sir.
So, but the prices have come down because steel, I was told it has come down. So has
Yes,
it?
sir. It has bit come down. Not very much, sir, but it was in downline trend. But again, it was in upline trend. So it is changing. But the what we can say the dynamism of the change in material prices have been very steady now. Before 2 years ago, it was very on the extreme stages, but right now it has been in a steady decline or rise. Both have been steady.
Okay. Sir, your machining capacity, is it possible
Yes,
to
sir.
share what is the capacity utilization as on September?
Somewhere around 68 to 66 to 68%, sir.
So now, let's say the whatever the H1 figures that you have made around
Hmm.
37 crores.
Right, sir.
Now this forging plan which has come up. Now you
Yeah.
have said part of it will be used for your own the existing products only where you used to earlier outsource. So that
Hmm.
part it will not contribute to the revenues. Only where company customer asks for only forging, then only that part of the work would contribute to the revenue. Correct?
For the forging plant revenue, yes, sir.
Uh,
But also because our forging capabilities are enhanced, so current customers also will start buying full finished components a bit more. So that will
agree.
indirectly add to the revenue itself, sir.
Fine, sir.
But as a direct revenue, no, sir. Indirectly through this plant, obviously, yes, sir.
Agreed. So what I'm trying to figure out is, like, let's say if you have done 40 crores, I'm just taking an approximate figure, 40 crore with the 68 or percent capacity, or say 70%. So that means the remaining 30% means we can do around 70 to 80 crores from the current facilities.
I would say more than that, but again,
Then
because
approximately, I'm saying again, plus or
yes, sir.
minus depends on
Yeah,
that.
yeah, we can do more than that. So, but again, I would like to mention that we are not into mass products manufacturing, sir. We are into batch order, job order, and project type manufacturing. So, because the setting time, the variance of the materials, the variance of the sizes, it's very dynamic situation. Because if you take a component called ball, a half-inch ball, if in a particular in material A will take X time, material B will take Y time, material C will take Z time. So it again depends on the the criticality, if the precision requirement on that ball. If a customer has low application or a not so critical application, a half-inch ball can also be manufactured in 50 microns precision or also 10 microns precision. So all depends on that, sir.
I agree with you, sir. But all said and done, if the complexities increases, what you're trying to tell us is that the numbers decrease accordingly, right?
The number of manufacturing decreases, but again, it also contributes in the revenue as well, right?
Exactly. That's what I'm saying. It'll get compensated by the higher price for that product, correct?
Yeah.
So I know it is very difficult to gauge, but I'm just giving you an approximately. Maybe current facilities can give us around 80 plus or minus 10% here and there, correct?
I cannot comment quantified, but yeah, our facilities will be able to cater more top line.
Okay. Now, last question is, see, other than these two facilities that you have, I think in the AGM or somewhere you had mentioned that you have taken two more places on lease.
No,
Correct.
sir, not on lease. We have our own land parcel. So if you have heard a question from, I think, Mr. Ayush, he asked
Okay.
that we have more land parcel and what are your plan. So we are still in brainstorming stage on how to utilize the land, sir.
So this land is under the company's name or the promoters?
No, sir. All the lands are in company's name, sir. No land is in promoter's name, sir.
Okay. Now these two land parcels, how big are they, sir?
Total around somewhere around 60,000 square feet, sir.
So they're bigger than what you currently have, right?
Yeah, double.
Double, almost. Sorry, you were 80,000, so 60,000. So as and when you sense that the current facilities you are already filled with complete order, you can plan out accordingly for the future expansion.
That's right, sir. That's
Correct.
totally right.
So when you want to expand, will you go to the expand in the existing products itself, or any other plans getting into different products or anything?
I have also already mentioned, sir, we are expanding our portfolio by verticals and horizontal as well. So horizontal will be obviously our current product lines, adding sizes and products, and vertical will be new products. And already pharma and defense have been added. We are still gauging few more how we can add the verticals. And in case needed, that's what it's still in brainstorming and planning stage, sir. I
No,
cannot
agreed.
comment on.
No. Why I'm asking that question is, sir, you may be, if you are not touching 80 to 90 crores during the current year, you will definitely reach that figure next year. So that means both your current facilities would be under 100%, practically possible utilization in FY26. So that means for FY27, if we want to see some growth in the revenues, you will have to start planning something immediately so that the new facilities would be ready by end of next financial year, right?
Right, sir.
Correct. So as and when you decide how much time it would take to put up a new facility, sir.
A year, sir. Somewhere around a year.
So that means you will have to finalize before the end of the current financial year, right?
Yeah.
Yes. Okay. Okay. Thank you very much and wish you all the best.
Thank you, sir.
We'll take the next call from Mr. Vince.
Hello. So my question was on the forging plant. which you mentioned, so what sort of the EBITDA margins will be there after we use that plant for our own purpose?
It will still be the not same, but on the past EBITDA's cycle will be taken care.
Means the revenue means the EBITDA margin won't be getting appreciated.
So not immediately, maybe in the longer run, yes, but still the full utilization and all is taken care. Till that, it won't have. In longer run, yes, it will surely have the impact, sir. But in shorter run, no.
You can just quantify what sort of impact would it get on the EBITDA line?
Sorry, sir, I won't be able to quantify.
Means on the percentage terms, I mean that.
No, sir.
And on the order book side, what is the total order we have secured till date from year start?
From year start.
Yes.
Yeah. Around, I would be able to say for somewhere around 50-55, sir.
And we have executed, means the total current unexecuted order book is around 15. So I guess around 40 CR of order we have executed, right?
Yes, sir.
Okay. Okay.
Mr. Ayush, you can ask your question now.
Am I audible?
Yes,
Hello.
sir, you are.
Yeah. Good afternoon, sir. First of all, thank you for patiently answering all the questions and taking us investors through the details. I've been an investor since
Pleasure.
last few months, and it's a pleasure to see your enthusiasm in the company. I was also a participant at the AGM.
Right, sir.
So, first thing which I want to understand is like when we talk about walls and wall parts, it's a very
Mhm.
critical thing to manufacture. And like you
Right,
were
sir.
saying that there are several SKUs and there's criticality difference between different SKUs and all. So can you try to share us as to how critical our general product range is, or how much of our product ranges would fall into a normal category or in a very critical category, or something like a value added or a normal category?
Yeah, all our products are in the critical ranges itself, but there are few times non-critical. So the manufacturing is the same. So like I
Okay.
mentioned, a ball has to be manufactured sometimes according to the application below 10 microns. If it is a metal seated type
Hmm.
wall, we have
Hmm.
to manufacture up below 10 micron. But if it is a floating wall, we can manufacture somewhere around 20 microns as well. So
Okay.
the criticality is there, but few
Hmm.
more criticality in new products. That's what, sir. Depending
Okay.
on, so the wall industry completely depends on the application.
Hmm.
So while designing of the wall starts, it
So like,
always starts with the application of that wall,
yeah,
sir.
I got
Where
that. So, like, if you have to classify your company into like, in how much of the products would you be facing a lot of competition or good competition, and how much of your business would be something which you can say is something very critical, and you have a lead over others, or you are the preferred supplier, something like that.
for ball, I am for sure the preferred supplier. For stem, I am for so because I deal with many butterfly wall. In butterfly also there are double offset wall, butterfly wall, triple offset butterfly wall,
Hmm.
control wall. There are various types. Is plug wall there are various types. Is in ball wall also floating ball wall, twin mounted ball wall. Metal seated ball wall again, like I
Hmm.
mentioned, in ball also there are many types. So
Hmm.
we cater all the SKUs and everything. So there are competitors in pockets, but not as big as us. I would say not that I know, or in my public opinion, or in my public
Got it.
scenario.
So, given the criticality of a products, like when I look at something similar companies or other companies that do critical thing, usually see that the margins, operating margin, usually are much higher, around 20% or plus.
Mhm.
For us, why do you think the margin profile is what it is as of now? Why we are facing these margin pressures, and what are we doing in the longer term to reach maybe a 20% kind of a number?
So, not the quantifiable to increase and enhance our margin cycles. Already the operational efficiencies are to be worked on, sir. So the reason we wanted to enroll engineering department in our organization was to take care about the processes, sir. So
Okay.
everything in the conversion, we as a management are already always of this mentality or of this culture that 1 rupee saved is 1 rupee earned. So
Hmm. Hmm.
whatever we save in this or processes also will be added. So operational efficiencies is one of the parts, sir. And also, utilizing the manpower effectively, the capacity. So because of the dynamism, how we can add, industry 4.0, if we are able to add, we are also checking that.
Yes.
Also, centralized programmings and everything. So there are various small steps. How we can improve the OTD, if we can
Hmm.
deliver the customer in lower, lead times, so as to, which can also take out the strain on the capacity and also help us, working capital and everything. So that there are various small things that we are taking, sir. And that's why we are also taking operational, like I mentioned, professional help also to improve our processes, sir. Because right now, whatever growth we have done, it has been done all by
Hmm.
mainly
Hmm.
90% plus by the internal team. But
Got it.
also to, because now we have to grow exponentially, there are some plans in place already.
Got it. Got it. So, sir, if we see our export, like you said, this year we have done 40% in H1. So I
Right, sir.
think the export is growing faster for us versus the
Yes, sir.
domestic business. Is that right?
That's right. That's right, sir.
So what is driving that? Who are the new customers we have added? Who are the key customers in this geography? And what are the key drivers for you that this growth or the opportunity that you're seeing that big growth can happen? Why you are seeing that opportunity and what is driving that?
The one is the, like I mentioned, maximum of our orders are the repeat orders, sir. So once a
Hmm.
customer gets confidence, they place it immediately. So we have been also working with many global MNCs. I have already mentioned the names. So if a, India plant of that entity is saying that, we procure from them and they are doing that, so their German or US counterpart will say, oh, is it? And now we have to also procure from India, so it is okay. I'll go to that. So that's how.
Hmm.
So also we have enrolled a key account management plan from last year, which we are also strengthening our relationship. Already, see, relationship with customers has been the driving force from 1993 or from the
Hmm.
inception of this company. But we are strengthening it through more defined processes and everything. And also because we are dealing with more MNCs and everything, so our global visibility is increasing. That's what I would say. And
Okay.
also the external parameters like, confidence and policy of, make in India and everything. So globally,
Hmm.
acceptance for Indian products has been enhanced in last few years.
And who will be the new key customers that we have been able to add, or and who are our top five customers, if you can name them?
Yeah, I already named them, sir.
Okay. And so, given that you are doing so many things and you want to grow, is there any turnover number that you have in mind in 3 years or for this year that you wish to aim to reach?
I would be willing for exponential growth, sir. I'm
No,
sorry, I
but
won't be able.
exponential, like if we see our numbers in last 3, 4 years, maybe we have doubled our business. So do you believe that the same thing you aim to do in next 3, 4 years?
Yeah, yeah.
Okay, okay, okay. Thank you, sir.
Sir, we have a few questions from Mr. Abhishek, but he's unable to ask those questions, so I'll be asking the questions on his behalf. The first question is, can you please share segmental mix and geographic mix for H1 FY25?
Sorry.
Can you please share segmental mix and geographic mix for H1 FY25?
So the geographical mix, I would say, major was from Southeast Asia, and then the Europe, and then the United States. That were the three major geographical areas we have served. And the segmental maximum from the ball wall, and then from the control wall, and butterfly wall.
The next question is, which sectors have done well for us and which sectors are muted in H1 FY25?
So oil and gas has been a dominant sector and it has been growing continuously and increasing. And like I mentioned, pharma and defense are the newly added sector, which we are confident will grow in next few years.
Okay. What is the current capacity and capacity utilization? Is the capacity expansion done? And what is the new capacity after expansion?
I've already mentioned that the utilization and everything while I answered the previous question. From the last year, we have bought, I think, around 10 odd numbers of machines, out of which 7 have been installed, which the capacity has increased. So when I say capacity has increased, for us, it is not number. It is either the efficiency, it is either the some process which we were doing outsource have been in-house, or some speed up of the component. So that's how we have increased the capacity.
Okay. We have current order book of rupees 15.24 crores to be executed in 6 to 8 weeks. This means that we have revenue run rate of 7.5 CR a month. Is the understanding correct?
Then that I would say. Yeah, right now it's right.
Okay. Is there seasonality in our business? Is H2 better than H1?
Yes. Yes, H2 is better than H1. That's been the trend.
Okay. Last question is, what is revenue growth and EBITDA percentage guidance for FY25 and FY26?
We will be positively growing and we'll be achieving growth.
Okay, Mr. Preet, you can ask your question now.
Hi, sir, I'm audible.
Yes, Preet, you are audible.
Good afternoon for taking my question and thank you for the opportunity. I have noticed
Sure.
in your balance sheet that last year we have added a new building worth rupees 4.4 CR and we have added a solar plant at valued at 1 CR and we have also added a land of 1.6 CR. Are we in the position to add new plant or is it for the forings only?
No. The new plant was the forgings plant itself. That was the cost incurred for the construction of the plant, the shade and the foundation and everything. And the solar plant was also already taken from the IPO proceeds. So both of our plants are now solar equipped.
Okay, both of the plant are solar equipped from the roof itself.
Yes, sir. Yes, sir.
So at currently we are not planning for any new plant after this one and two.
Not immediately, sir, but like I said, whenever and however the expansion plans will be defined, that will derive and guide our expansion plans.
That's from my side. Thank you.
Thank you so much.
Mr. Rohit, you can ask your question now.
Hello, I'm audible. Hello, am I audible?
Yes, yes, you are.
So any specific reason why we do not want to give any financial what figures are we planning to go for this year? Because we see a lot of companies giving financial numbers for the year. So any specific reason we are not advising the figures?
Sorry, I was unable to hear properly. There is some disturbance from your side.
So what I wish to ask or want to know your perspective is, any specific reason do we have while we are not giving any, what financial figures are we estimating for this year? Because we see a lot of companies giving this figures, an estimation of figures we can just give us so that that can be a motivation for us to remain invested.
Okay, maybe I'll come back to you, sir. But there is no specific reason, sir. But we have been it's still a confidential information, and we'll be making it public maybe at the right moments.
Okay, because I think by going by the numbers of H1, you should try to give. But anyways, good luck. Thank you.
Okay, sir. Your point is very well noted, sir. We will think on it for sure.
Sir, we have one more question from Mr. Abhishek. For whole year, generally what percentage of revenue contribution comes from H2?
More than it's more than H1. I'll have to see. I would say more than 50. Yeah, more than 50%.
Mr. Lakshman, you can ask your question now.
Yeah, I had a very similar question to the previous previous caller. So, what is the percentage of revenue split with H1 and H2? Is it a 35-65 or a 40-60?
I think I've already answered your question.
No, you said 50%. So, is
No,
it
more than
50-50?
50%.
So, what do you mean by that? Is it 40-60 or is it 50-50?
Yeah, somewhere around 46.
Okay. And yeah, I mean, what is the guidance for FY25, sir? Most of the companies gives that, right? There is nothing. I don't know. I mean, there is nothing wrong in telling the guidance what you are looking at, because the first half has been really very muted with so much of growth expectations, right, from all the investors. I think it was kind of a little bit disappointing. But we understand. I think the business will have its own ups and downs, right?
Right.
But so with this additional capacity, what is the utilization, maximum utilization you can go up to, sir? With you will have a lot of thoughts before, a lot of strategies and the plans you would have made before going in for the adding the additional capacities, right? So, with that thoughts, can you give us some idea in terms of that? What is the maximum utilization you will normally go with, and if for that utilization, what is the revenue expectations we can make?
I was mentioned that we can go a bit more from the capacity utilization side, because seeing the product types and everything, we will be improving in future, because it's a long process. It's a long process. It's not that in fortnightly we do some changes and it adds up. So it's a long process, and we are taking efforts for improving our capacity utilization.
No, sir. So my question, let me rephrase this. Say now you have three hammers and an additional capacity in terms of servicing, right? So with let's assume that you will be able to make say 80%, 90% in FY26 or 27, whatever it is, right? I don't want to know the dates. But with your current the additional capacity, if we have to say achieve 90% of that utilization, if we achieve that 90% of the utilization, what would be the revenue which this capacity can generate for the company? A ballpark figure. I mean, you don't have to be really 100% right.
It will be exponential better, more than this, sir. It will be exponential, because 90% is somewhat we see as an ideal capacity utilization.
Yeah, but some numbers, sir. Like
I'll have
right
to
now we are doing say 40 crores per in a half, right? So even if you extrapolate with the same utilization, it's 80 crores per year, right? If you make say, if you take an example of maybe a 75% utilization, then what is the revenue number our company can hit if it is in the same utilization or 75% utilization with the additional capacity?
I'll check and get back to you, sir.
Okay, fine. Okay, thank you.
Thank you, sir.
I would now like to hand the conference over to Srinivas sir for the closing comments.
Thank you, Siddhi, once again. So I, on behalf of Shri Balaji Wall Components Limited, again, thanks all the investor and the attendees of this call for listening to us and for attending and, for the faith in Shri Balaji Wall Components Limited. I would like to say that we are here with a long-term vision to grow and, to grow and grow. That's what we are here. That's the reason I, as a second generation entrepreneur, have joined the legacy created by the first generation. And we would like to also extend our heartfelt thanks to these shareholders for having faith in us. And we look forward for the same in the near and the longer future. Thank you once again. Over to you, Siddhi.
Thank you everyone for joining. You may now leave the meeting.